Okay, so is the market going to crash again or isn't it? That's really dependent upon you. But if it does, how are you going to know it before it happens so that you can get out of the stock market before it happens and then get back in after it happens? So I think you just need to look back at history to come to some understanding. In the Great Depression, you would have known it when the banks started to fail. Because shortly after the banks said we don't have any money, the stock market crashed. But that's when communications weren't all that good, and things happened that people didn't understand, and we didn't have social media, and we didn't have the national news to tell us what's happening. So let's move forward and look at 2008 and what caused that crash, and how does it relate to where we are right now, and how might we be able to get a signal? What we're really looking for is the canary in the coal mine. If that doesn't mean anything to you, let me explain it to you. When coal mining was an art and a lot of it going on, and before they had sensors and air measures and all this sort of thing, the miners used to carry a canary in a cage into the coal mine with them, because they learned that as the gases in the mine got bad and could kill them, it would kill the canary before it would kill them. So they kept that canary in a cage, and when he fell off his perch, they got the hell out of the mine because they knew the mine is now dangerous. Let's get out of it. Well, that's what we're looking for in the stock market, a canary in the coal mine. So how can we look back and learn from past history to learn what's happening? Well, let's look at where we are right now. We have an economy that should not be in the position it is, because I think it's about 40% of the workforce is out of work. But they're collecting, or had been collecting up until roughly July 1st, unemployment and an unemployment supplement from the federal government. So here in Alabama, they might collect $150 from Alabama and $650 from the federal government. So that's what, $750 a week. And if you had a husband and wife who both qualified, that's $1,500 a week. Well, with $1,500 a week, you can probably continue to pay your mortgage payment, and you can probably continue to pay your car payments and your credit card bills, and you might even be able to go out and put some more money on the credit card bills and go out to dinner, and you pretty much move through your life. You're paying for your groceries, you're paying for your utilities, and so life is doable, okay? So now, though, what's happened is that those checks stopped. The 150 is still coming, but if, again, we got two people, now that comes down from $1,500 a month down to $300 a month, or excuse me, $300 a week. So now, in the heat of the summer, your electric bill might be that big. I'm sure your grocery bill is going to take another week. And then your other utilities, your car payment, you don't have enough. If you have credit card payments, what you're probably doing is paying the minimum. Well, that's running up the interest that you're being charged. But the pandemic's going to go away and I'll be okay. And now, maybe this far into August, maybe you didn't make your mortgage payment, but the mortgage company isn't going to come after you for probably at least 3 months, maybe 6 months before they actually evict you. And so, and they'll enter into this forbearance. So you aren't paying them. You aren't paying your wife's student loan anymore. You aren't paying your credit card bills. And you aren't paying possibly other debts that you've accumulated. Particularly, you're adding to your credit card bills and you aren't going through. So you're going to be the cause. If this keeps going on, if this goes on into next year, you will cause the same thing to happen in 2021, say, or late 2020 that happened in 2007. So what happened in 2007? Well, leading up to 2007, we had craziness going on in the mortgage market. We had mortgages that basically said you can come and borrow the money with little or no credit, and your first payment isn't due for a year, and then you will only pay interest only on that for 5 years. And we know that the value of the home that you're buying it's always gone up an average of 9% a year. So in 5 years, your house is going to be worth more. And so if you can't actually pay it and we'll refinance it after that, you can sell it and sell it for a profit. Well, that sounded good, so okay, I'll do that. Well, why don't I do that for some rental property as well? And this is when flipping really took hold. And so now you not only had your own mortgage, you had a mortgage on a rental house. But that's okay because the renter is paying rent to cover the interest-only loan that you have on it. And again, in 5 years, when that balloon opens up, the house will be worth more and you'll be fine. Okay, that was probably from 2004 to 2007. But in 2007 is when those balloon payments started coming in and you couldn't make them. So you put the house on the market and you couldn't sell it. And you were missing your payments and you fell behind and the bank foreclosed. And in August of 2007, Lehman Brothers, what was called a credit default swap, they had in these bundles, if you'll call it, mortgage payments, car payments, student loan payments, credit card payments, and they melded them together to anticipate what the interest rate they were going to generate, and they sold them to the very wealthy people who bought bonds. They were in the form of a bond. Do you own any bonds? No. Wealthy people own bonds. Credit unions own bonds. Pension funds own bonds. Universities own bonds. Very wealthy organizations. Foundations own bonds. Well, when Lehman Brothers couldn't pay those wealthy people their interest on their bonds, they stepped up. And the first indication, the first canary that dropped was in August of 2007. When Lehman laid off people, they wrote off $25 million in bad debt, and they wrote off another $27 million in goodwill. Okay. And things went along. That was August of 2007. In August of 2008, Lehman Brothers laid off another 1,500 people. In September 10th, they declared a loss of $9 billion. On September 15th, they filed for bankruptcy. About that same time, they went to Hank Paulson and told him, we're failing. We can't make our payments. Bail us out. Hank Paulson called together all the other Goldman Sachs and brought Lehman Brothers in, brought Jamie Dimon in from all the big bank companies came together and Hank said, bail them out, buy them up and save them. And the other banks said, we're in no position to do that. Merrill Lynch, a lot of the brokers said, we're in no position to do that. What you got to watch for is this. This is Hank Paulson's face of fear. Because when you see that same face on Steve Mnuchin, and it's possible, that's when you need to get out. Okay, so let's carry the story on further. So that was on September 15th of 2008. On the same day, the Dow dropped 4.4%. It was the largest drop in the Dow since 9/11, when the planes hit the towers. At the same time, AGI, which is a huge insurance company, Goldman Sachs and Morgan Stanley said, Hank, we need help. On the 29th, the government stepped in to keep the banks solvent. So, what can we learn from that? We can learn the Canary drops a year before the market dropped. If you want to really understand this, you need to get this book. It's Michael Lewis's The Big Short. It tells the story of Bradley Cooper. He played the part in the movie, who spotted this. And he ran a hedge fund, or he managed a hedge fund, and he told the world about this starting in 2007. But nobody believed him. Nobody believed the market was going to crash, but it did. So, is that what you're going to see happen when you can't make your mortgage payment, when they evict you from your home, and is that when the market's going to crash? No, because nobody cares. You're going to move to your parents' basement. Nobody cares that you become homeless and live in a cardboard box somewhere in Los Angeles. Nobody cares about you. What they care about is Lehman Brothers, Goldman Sachs, Morgan Stanley, Bank of America. They care about the big financial institutions who no longer can meet their obligations to the fat cats. Okay? So, is that what's going to happen? Well, either that's going to happen, or you're going to get another check for $1,200 a piece. You're going to get another weekly check for $600, and you're not going to get evicted from your home. So therefore, you're not going to see Steve Mnuchin's face of fear, and you're not going to see the market collapse. So what is going to keep that from happening? Right now, the Republicans and Democrats can't come together. They can't come to make the Democrats want to send another $3 trillion out and save small business and save individuals. But the Republicans say that's just too much. That's just too much. Well, as you start to sweat sometime around the 1st of September, I'm going to compare that you're on a ship and you're standing too close to the rail and the waters are rough. And a guy in a white uniform comes up to you and says, Gary, you need to step back from the railing and maybe you need to go inside because the waters are kind of rough and I don't want to see you thrown over the side of the ship and end up in those rough seas. You're going to say, thank you very much. And that'll be the end of it. And that will be if you get your check with no big hassle, maybe by the end of August, okay? But what if you went over the rail and you were in the water and you were drowning and that same guy in that white coat threw you a life preserver and by himself he pulled you in and saved you? Would you be obligated to him? Would you say, my God, thank you so much for saving me? We could not have done it without you. That's why you aren't getting your check yet. Somebody is going to let you sweat and let you get anxious, and then they're going to throw you a life preserver. And it'll probably happen somewhere before the second Tuesday in November. And they're going to ask you for a favor. I don't know what that favor might be. You probably do, though. That's what I think is going to happen. So, what am I going to do? How am I going to approach this? I'm invested. I told you yesterday what my investments are. I'm not worried about them. Amazon, Google, Facebook, you name them, Microsoft, they all got enough money to get through this. It isn't going to matter one bit what happens over the next 6 months. They will survive. But could their price, could their value, could their market cap drop 10, 15, 20% if you go over the rail? Yeah. If there's nobody there to save you? Yeah. If it puts Goldman Sachs, Morgan Stanley, the big banks, the pension funds in jeopardy? Yeah. This could all happen again. So what I want you to be aware of is there is a canary. You watch for it. You watch for it. It's called the banks. It was the banks that brought on the failure of the Depression. It was the banks and the mortgages that you couldn't pay. It was the banks that brought on the crisis in 2008. It was the government then who stepped in starting in 2010 and started pumping $10 trillion into the economy that saved it. In this issue with the coronavirus, rather than wait for Morgan Stanley or Goldman Sachs to fail, they put that $3 trillion in up front. And everybody says they're a genius. Everybody says Steve Mnuchin saved us. The government saved us. Okay, I'm good with that. But if they don't save us again, you watch. And I would mention to you, Warren Buffett in Berkshire Hathaway unloaded the banks last quarter. That's important. That's an important piece of information. He's got his eye on the canary. He's worried about the canary, so he got away from him. I'm not saying there will be a crash. I'm not saying there won't be a crash. But I know what the canary is, and now you know what the canary is. Keep investing in large companies, in cash-rich companies, and you'll be okay. But watch for the canary. I'm going to be watching. If you want to be a part of my watch, go to bestofusinvestors.com. Give us your name. Give us your email address. In the future, we may be asking for your cell phone number because when the canary shows up, I want to let you know. I don't want you to wait until the next morning to learn it. Because I don't think it's going to happen like it did that Lehman laid off 1,200 people on August 2007 and then filed for bankruptcy in September of 2008. I don't think you're going to have a year to prepare. I think it's going to happen fast. So we need to be astute, we need to be observant, and we need to share our knowledge. I don't have all the answers. You do. And together, we'll avoid the next dead canary.